Thank you. We have Professor Lin connected. Steve Tsang, you are director of the SOAS China Institute. And Justin Lin, you are former chief economist of the World Bank and currently dean at the Institute of New Structural Economics at Peking University's Institute of South-South Cooperation and Development. Thank you both for being with us this morning. Now, in the previous panel, we just heard there from Dr. Canuto, who discussed the broad implications of climate change. Steve, I'd like to start with you. In your view, can China encourage or influence emerging and developed economies to ramp up efforts to make their economies climate neutral?
Yes, I think there is a lot of scope for China to do so, not least because the Belt and Road Initiative is very much a almost worldwide phenomenon now. And there are a lot of countries at the Belt and Road countries which are having new power plants being built. So China certainly had the scope to suggest to them that the new power plants to be built will have to be very ecological ones. But the reality is that the Chinese government has not been doing so because the Chinese government has different priorities. They are now building less coal-fired power plants because the recipient countries do not want coal power plants any longer. So there's a lot more scope for China to do more.
Justin Lin, what do you think?
Yes, I think that China can contribute a lot. The first one, China can be a good example. As a developing country, you can pursue development in a green way. And as you know, China committed to peak the carbon emission by the year 2030 and to neutrality by the year 2060. Good example is very important. And secondly, China now is the major producers of green technology. China produces more than half of the solar power panel in the world, more than half of the wind power facility in the world. So China can help the other country to pursue the green growth by adopting the new technology, and especially through the Belt and Road Initiative. One thing, China already committed not to build any coal power fires in other countries. I think it was not because it was not demanded, because many other countries, they may not put as high priorities on the green growth as the developed country and as China now. And they need to have power for their development. But China now switched to, yes, we will be happy to help, but it will be the green energy by solar power or wind power or hydropower.
Okay, so China has more to do on that front. Now, Steve, I'd like to bring you in because our current world is experiencing multiple shocks. We've been talking about it all morning long. In addition to climate change, let's talk about the COVID-19 pandemic, the after effects of that, geopolitical conflicts, disruptions in trade relations, the list goes on. Could you help us comprehend China's role, its opportunities and challenges in today's fragmented global environment?
China doesn't want the world to be unipolar, particularly if the unipolar world is one that is dominated by the United States. China also doesn't want the world to become bipolar. They see it as a return to the Cold War into two blocks. So a multipolar world, your fragmented world, is something that the Chinese government quite like. It's a positive thing from their perspective. I have been studying Xi Jinping thought for the last 2 years. What comes out from that study is that ultimately what Xi Jinping wants is for China to be accepted and embraced as the leader of the world, not by replacing the United States, because replacing the United States means carrying on the baggage that the Americans have. They wanted to do it on Chinese terms. So a fragmented world that continue until China is ready to assert their global leadership works well from that perspective. And we have seen that there are scopes for some of those strategic developments, like the Russian invasion of Ukraine, where China could have interfered and tries to broker a peace, that China has not done so. We have also seen the zero-COVID policy in China being persisted for domestic political reasons, even though it is having a major negative effect both on the Chinese economy and on the global economy. Again, China could be doing a lot more. But for domestic political reasons and leadership considerations, they are not doing either of them. And I think that is a pattern we have to expect to continue.
We're going to talk about China's zero-COVID policy in a second. Justin Lin, I'd like to bring you in because the current war between Russia and Ukraine has sent shockwaves throughout the global economy. What are the implications of this conflict for China's economy in both the short and the long term?
Well, first, China sees that as a tragedy to people in Ukraine, to the soldier from Russia or in Ukraine. So China like to see this war can be resolved peacefully through the UN charters. And that's the open position China has been advocated. And certainly this war has some kind of short-term impact on China because China is importers of oil, food, and because of this war, the prices of oil and food surge up. Certainly, that will increase the cost of import, and that will have a negative impact on the economic growth in the short run. In the long run, I think we can anticipate the tension between Russia and Europe is going to persist for some time. And those kind of geopolitical tensions certainly have some implication. Some people try to put China and Russia as a bloc. And if that, certainly those kind of geopolitical tension between Europe and China will have a negative impact on China. But as I mentioned, China make it clear. China respects territory integrity of any country, including Ukraine. China like to see the conflict will be addressed peacefully. So as long as China is not dragged into that kind of geopolitical tension between Russia and Europe, I think the long-term impact will be minor.
Steve, given that you said Xi Jinping's ultimate goal is to have China as this global world player, and as we heard there from Justin Lin, China respects every country's territorial integrity. Why has he not done more to bring an end to this conflict, considering he can? President Putin would listen to him.
Well, we don't know whether President Putin will listen to Xi Jinping, but if there's anybody that Putin will listen to, it would be Xi Jinping. Now, why did he not do anything? Putin went to Beijing at the start of the Beijing Olympics.
Exactly.
They had conversations, and at the end of it, there was a 5,000 words statement that was being released in which Xi Jinping declared unlimited friendship that China will have for Russia, and Xi Jinping, will have for Putin. Xi Jinping and China don't need a war in Ukraine. The Ukrainian government were on very good terms with China. But Putin must have persuaded Xi Jinping that whatever his plan was, at the end of it, which will be quick, efficient, and effective, will be a new government in Ukraine that will be even more friendly to China. So what was there not to like about it? And with that reassurance of Chinese support, Putin deployed his troops for the invasion. China then thought that it has made a mistake, miscalculated, Russia failed. And then you get into a situation where, in fact, that mess that Russia created potentially created a golden opportunity for Xi Jinping to achieve a major goal of Chinese foreign policy, which is to make the world pay due respect to China. He could have interfered. We know that the Chinese Foreign Ministry realized that China should do more, but Xi Jinping's support for Putin was not shakable, because if Xi Jinping should allow Putin to get into trouble because he made a big mistake in invading Ukraine, what kind of signal is it being released to people in China about mistakes that Xi Jinping may be making? So he can't afford to not support Putin. We end up with a Chinese policy that amounts to declare neutrality, supports Putin, but pay no price. That's the limit of the unlimited friendship for Russia. China will not do whatever that will trigger secondary sanctions.
Interesting. I'd like to talk about what's going on in China. Justin Lin, you're in Beijing right now, so we have to talk about COVID-19 and the pandemic, because I guess what I want to know is, what are the implications for this long-term insistence that China has on zero COVID? What are the impacts to the Chinese economy and more generally to the global economic system?
I think the first one we need to recognize the dynamic zero-in COVID policy was very successful in 2020 and 2021. As you know, in 2020, all the major economies in the world were hit with a negative growth rate. But China has 2.3% positive growth rate. In 2021, again, China was among the highest growing countries in the world with 8.1% growth rate. So we need to recognize the zero COVID policy was very successful in 2019 and 2020 and 2021. But in 2022, the situation changed a little bit. So Omicron, the R0 is so high, more than 10. And under this kind of situation, you have to balance. If you have a larger tolerance, like in other major economies, certainly, if you get, the Omicron, it was not so serious on the average, but it's going to be so widespread. And so, if China adopts similar policy, we can expect maybe hundreds and thousands of people will die out of COVID-19 because China has 1.4 million, 1.4 billion population.
Yeah.
So it was a calculation between economic cost and the value of the human life. And I think that at this stage, China put the value of human life higher than the economic cost.
I understand, Justin. I want to jump in. I want to jump in because how sustainable is this strategy, is this approach, given that we have countries that were very closed up before, like Australia even opening its borders and pivoting to a learning to live with COVID strategy?
Certainly, then it depends on many other factors. For example, vaccination rate. And when the vaccination rate, especially for the old age people, increase, then we can more relaxed. And also to increase the availability of ICUs in the third-line city, fourth-line cities, rural areas. Once we have those kind of preparations, I think the policy will be, adjusted.
Stephen, final question to you. How can China encourage global cooperation on the international stage, and what are some practical steps to achieve this?
Well, China can encourage international cooperation at this point by taking a leading role in finding peace over the Ukraine war. And China
But it's chosen not to do this.
No, it will not do so. I mean, you ask me what China can do, not what China is doing. And so the biggest issues that are really messing up the global economy are both the war in Ukraine and the restrictions that come out of it that affects the economies globally, and also the disruption of the global supply chain because of the zero-COVID policy in China. So both are policies that China can take initiative within their capacity to fix. The reality is neither will be done because the leadership would not do so. There is a 20-party Congress of the Communist Party coming up in November when Xi Jinping will need to have his third term secure. Nothing will be allowed to stand in the way of him being reconfirmed as the leader of China.
Just briefly, you mentioned that the zero-COVID strategy is done for domestic political purposes, but don't people see, we rarely see things go out on social media in China, but we saw residents trapped in Shanghai running low on food. Clearly, they know that people and residents are unhappy with this.
Well, people are unhappy about it, but every single official in China and every person who speaks in China on the subject publicly will tell you that the policy is right. If there is a problem, it is at the implementation level. Xi Jinping is never wrong. Zero COVID policy is a Xi Jinping policy, which he sees as a policies that demonstrate the superiority of the Communist Party system, and is his policy. So he must make sure this will continue to be affirmed as the correct policy until after the 20-party Congress, and indeed the National People's Congress next year, when he will formally be re-elected as the president of China. After that, maybe some leverage. Before that, I don't see any real change happening.
Justin Lin, what more can China do to encourage more global cooperation on the world stage?
Well, I don't fully agree because we see Shanghai has been reopened. We see Beijing has been reopened, right?
Yeah, but
and
after
there's
weeks.
There's some disruption to supply chain. But other countries, even they have this kind of very laid down policy related to coffee, you also see the disruption of the supply chain. And certainly for China and for the world, we like to see a global cooperation. So for example, the climate change, China has been very active in the reaching agreement of climate change. China has been very active in providing the support to other countries to restore and from their economy through the Belt and Road Initiative, through the Global Development Initiative. And certainly China also like to see the peace in Russia and Ukraine be achieved as soon as possible. And the best way is to have the diplomatic negotiation within the UN charters. China has been very active to that. And I think that certainly, that is the role that China can play, and China like to see the good development in the world.
Justin Lin, Stephen Tsang, we're going to have to leave it there. Thank you very much for this very lively and interesting discussion. Thank you very much.
Very good.
We'll just go that way. Thank you. Now, let's bring in Amundi's CIOs, Yerlan Syzdykov and Xiaofeng Zhong, respectively, Global Head of Emerging Markets and Chairman of Amundi Greater China, for their expert views on the implications for investors and markets. Good to have you with us. Xiaofeng, I'm going to start with you in light of the panel which we just had. They're a very interesting panel on China, and taking into account the current events in the country. From your perspective, What elements should investors look at today?
Although a technical...
Is the mic on? Okay.
So, although the technical... Okay.
We'll fix that.
Sorry for that. Although the technical recession is likely in Q2, we have already seen fresh data pointing to a gradual recovery in May and June. And we expect the second half to seeing a stronger recovery in the economy. That's on the growth side. And then on the policy easing, we also expect more policy easing. We have already observed a shift regarding regulatory policies, more significant financial support to the market. So these measures, along with rebound in activities, could actually reboost the confidence of the investors in China. A third comment is on the currency. Again, we have seen weakness in the currency. However, we don't believe in a structural devaluation, which is not in the interest of China because they are shifting the economic development model from investment, exports to domestic consumption. In addition, the geopolitical regime will entail a shift from US dollars into, the shift of US dollar in a more diversified foreign exchange reserve framework. And again, renminbi could be a pole of attraction in this new regime for some Asian countries. So very quickly, fourth element on the fixed income, I think Chinese bonds are a very good diversifier. Although the yield differential with US has reduced recently, but it's a different cycle. And the central bank in China is in easing mode. Okay. There is no inflation threat, and the domestic cycle is increasingly dominated by domestic factors.
Yerlan, I'd like to bring you in because as we've been talking about, there's this increasing fragmentation that is going on. Given that, what are your convictions regarding emerging markets?
Yes, indeed. Russia-Ukraine crisis that we've been talking today at nauseam has come to emerging markets from the perspective of economic pressures already at the time when the economic momentum has been relatively weak. So, of course, we've seen already China in a situation with its real estate sector being under pressure from growth perspective. We've seen already some of the inflationary pressures and some tightening, actually early tightening by some emerging market central banks compared to the developed markets central banks. So that already was putting a lot of pressure, and before even the war, of course, that impulse on the inflationary side, on the rate side, has pushed us even further into this fragmentation area. And of course, let's not forget that we are now today living through the most significant tightening of the monetary policy since global financial crisis. And of course, as we already discussed, the Chinese policy on zero tolerance to COVID, which is obviously also putting a bit of a pressure on the global growth. So the environment, of course, is challenging, but fragmentation is clearly happening there. So how do we positioning ourselves in this fragmentation? We are clearly looking at some of the winners that are the commodity exporter countries. They're riding this commodity wave, so they are experiencing significant boost through this positive shock to their balance of payments. And of course, we're also looking at those countries where central banks have been very prudent and proactively hiking and tightening monetary policy. So even though we're now postponing the time when we think the peak rates and peak inflation will come to emerging markets, now we've been thinking about maybe second, third quarter is not happening with Russia, Ukraine. So I think this is going to be probably the last quarter of this year. But nonetheless, those countries which went into that mode first. I think they will emerge from this first, and they will have an opportunity to stimulate the economy later on. Of course, those countries that have more prudent fiscal policies are also differentiated, and they're also in this fragmentation environment going to be the winners.
Very briefly, Yerlan, what should global investors expect this year when it concerns the equity markets? Any areas and sectors they should be looking at?
Well, clearly, the challenging environment that the factors I mentioned in inflationary pressures, commodity prices, that gives us maybe from the perspective of clarity or visibility on corporate earnings, very difficult for us to forecast. However, I think we need to remember two things. That I think that in this environment we've seen I would say indiscriminate almost a sell-off in emerging markets, where today the valuations are quite depressed. And of course, we're looking to differentiate ourselves along the same themes that I mentioned earlier, is that we're looking at some of the exporters, that commodity exporters, those companies are going to be in a very strong position, and will be the winners in this environment. And of course, also those countries that are, and Xiaofeng already mentioned that China is obviously being the one where we will continue seeing improvements, as we expect the relaxation of zero tolerance to COVID at some point.
Maybe later this year.
Yes, exactly. So I think this is our expectations, and I think with that, I think we will have a very counter-cyclical resurgence of Chinese growth based on the boost to the consumer spending. So I think these are the areas where I think we can really see a better performance in emerging markets.
Xiaofeng, I'd like to bring you in, because what is the best way for investors to gain exposure to Chinese equities?
Like Yerlan said earlier, I think the situation has been improving, and most of the bad news, I would say, should be already priced in, and we see stabilization in the market. So valuations are pretty low, offering a good entry point to investors with medium to long-term investment horizon. So given the huge potentials ahead, Chinese equity market indeed represents a significant opportunity that investors should look at with a long-term view. Obviously, our preference goes to, I would say, onshore equity market, A-share market, go to value stocks with attractive dividends. And this is due to some structural factors, such as low correlation with the EM, a very good diversifier, and also stronger autonomy of Chinese circle, and very well diversified at sector level. And then you have a rising middle class and increasing share of China in EM indices. Quickly, in terms of sector, obviously we like areas linked more to domestic activities, such as healthcare, industrials, and consumer discretionary. So all in all, we are quite positive on the re-engagement opportunity for global investors in the Chinese A-share.
Xiaofeng, very briefly, where does the opening up of Chinese financial markets stand today, and how can global investors benefit from this trend?
Yeah, as I mentioned already, I think China is a huge market with its own sort of with certain degree of autonomy in the cycle. Second, China's also a digitally very developed, if I may say so, consumer market that is benefiting from rising middle class, increase in the wealth of households, and also from the large consumer base. And these two have been mentioned earlier. Now, the financial market is developing very fast with a huge potential ahead. This is driven by proactive policy measures. We have seen already in April and May a lot of reform measures announced by the government. This is driven by much bigger allocation of family income to financial products. In the past, it was for property, and now to financial products. And also, it's going to be driven by the impending pension reform. So, I mean, the Chinese mutual fund market is already the second largest in the world. If we don't count the markets of fund domiciliation, it's 25 trillion. And yet, it's just 10% of the US size. Compared to GDP, it's less than a quarter of Chinese GDP, knowing that in US, it's 140% of the GDP. So these trends will continue to increase the attractiveness of China as an investment case, as also the relevance of China as a core part of the global investment and asset management market, which again, global investors could well benefit from in the long-term perspective.
Xiaofeng, thank you very much for that, Yerlan. Thank you very much. And that wraps up this session. Now it's time to conclude this morning's event.